Hey there, Kenneth French of Vast Voice, telling business secrets to entrepreneurs. We're very, very happy you stopped by. Either you're going to watch this or listen to this because you want to take your business to the next level. You're probably an entrepreneur who's either just starting out or you've been around for quite a while and you want to take your business to the next level. You're probably a real estate investor, maybe even a real estate agent, maybe a professional or of some sort, professional advisor of some sort. And well, you are stopping by because you need some valuable advice from one of the top industry leaders there is. Anyway, thank you very much. Once again, Kenneth French, Vast Voice, telling business secrets to entrepreneurs. Really glad you stopped by. Nathan Garcia is here, and we're going to talk business, ways to make money for you as a client and ways to make money for you as an entrepreneur. It's going to be a pretty interesting conversation. Stay tuned. What's up, Nathan?
Hey, Kenner, how are you?
I'm living the dream. I'm glad we're here because you and I have very similar viewpoints of how kind of old school technology type companies now need to adopt the new technology type of world. And then, who knows, maybe even make more money for their clients and also them as entrepreneurs. So this is going to be good. We're going to hang out for 15, 20 minutes. We're going to add some value. You ready to go?
Absolutely. Yeah, let's do it.
So why don't you go ahead and outline some of the things you've done? Obviously, you're a financial planner or advisor, whatever you want to call it specifically. And then you've decided to take a different tack. You now have an app. Let's talk about that because I think a lot of our people are kind of in old school firms, if you will, old school entrepreneurs, and they want to move towards technology because it'll open their market, make them more efficient. So tell us a little bit about yourself, if you don't mind.
Yeah, so I consider myself a serial entrepreneur. I own a few different companies. I'm an angel investor, and I have a vertically integrated business. But if you looked at it from my portfolio perspective, I have my certified financial planner designation. I have my Series 66, so I can provide financial advice, investment management for a fee. But I also am the owner of a digital marketing agency. And I started that in order to generate leads so that I wasn't splitting commissions with the partners in the firm. And the profit of that digital marketing agency was used to develop an application, a software application that helps me to get more clients. So my entire portfolio is coordinated to help to grow my business and to grow my brand. But I thought about it in 2018, 2019, where I'm looking at the industry in financial services and you see that a lot of the industry is getting older, but the multiples that these guys are selling their businesses, their books for is like 2 to 3x revenue. But then you go and look at these technology companies and, what are the technology companies selling for? Right. Most of them are selling at, 10x, depends on the day. They might be at, 20x revenue. It just really depends on the market itself. But if we could bolt on that technology with the traditional business model, then we could raise the valuation. And you're seeing it now in the financial services industry where, companies like Financial Engines, for instance, they were purchased by Rick Edelman, great financial planner, done a wonderful job at getting his name out there through his podcast, what have you. But by bolting on Financial Engines, he's made himself so much more valuable and the organization more valuable because of their capabilities. And I really like that model. I think that model is going to go forward for a while now. So yeah, to your point, I think that there's a lot of opportunity there.
That's exactly right. Plus, you could, if you have good technology versus someone else who doesn't have good technology, you're providing services for a client, you can usually lower your price theoretically or make more money per transaction, let's just say. Spend more time with your family as an example. I mean, there's so many ways that utilizing technology helps. And we started using technology, really our own artificial intelligence model, 2018. It was a game changer for us because we haven't had to increase prices quite as much as the next person because we are more, we're quick in the market with things. We're, lower prices. I mean, lower labor prices. It's just been a game changer. So you and I talk the same language.
Absolutely.
So, and I think especially we have a bunch of people who are real estate investors or real estate agents, and they're way old school, generally speaking. If they can utilize some of the technology, kind of like what you and I are talking about, I think it'll help them make a lot of money. So this is a narrow market we might be talking to,
Sure.
but it's a market that could be very happy if they adopt some of the technology we're talking about. So I know you have an app. Let's talk about that. How you decided to kind of go to that app. I think that's pretty cool and utilize that for your business. Why don't you go ahead and mention a little bit about that?
Yeah. So I'm the owner of, or the founder of app. It's called Pocket Plan. And what we've done is we've helped people create better financial decisions. We do that by giving them a real-time personal financial model that they can use with multiple advisors. So as a business owner, you might have a partner in the company. You may have a partner in your family that needs to share financial information with, but then you're going to be getting advice from multiple advisors. It could be your banker, your CPA, your life insurance advisor, your investment advisor, and each of those advisors works on a different business model. So their incentive is different. The CPA's incentive is different than the banker's incentive, right? The banker wants you to take out a bunch of debt. The CPA is telling you to do the most tax efficient strategy this year to lower your taxes. And so as the entrepreneur, you're responsible for making the best decision to reach your financial goals, but you have to interpret and digest what those different strategies are and what they mean for you. And so we started this company as a result of having the conversation. I went through the experience with one of my clients. He sold a portion of his software business in Alexandria, Virginia, to a venture capital firm, a PE firm. And we were sitting around the table. He had a foundation that his wife ran. He had his CPA there. We were running his investments, and I was a financial planner. And then we had a life insurance guy there as well. And so everybody's telling him, do this, do that. And I ended up making about 300 different financial plans for him. And it was a challenge because I would go to the estate planner and the estate planner would say, well, the trust needs to look like this. Let's coordinate it like that. And then the CPA would come back and say, no, do this. And so we ended up with all these financial plans. It was really confusing for the client, and it was cumbersome for the entire group because there's not a common platform that we could all collaborate on and use to show our client, like it's a recipe, but everybody's going to bring their distinct ingredient to bring out the flavor.
Yeah, I get that. It makes it more flexible, nimble, et cetera, et cetera. You can answer more scenarios, more questions easily from the sounds of it. So yeah, I totally get it. By the way, how does someone find your app?
Yeah, they can go to pocketplan.io. We also rank #1 for Pocket Plan. So if you just search Pocket Plan, that's the easiest way to find us. And then most people are putting in their financial information on a desktop computer. So we're very security oriented. So we would advocate you do that. But in there, we are connected with Plaid. It's a tool that allows us to bring in real-time financial information about your investments, about your asset balances, and then we pre-populate the financial reports for you. So those common reports like a net worth statement, a cash flow statement, your investment statement, those are all going to be available for you. And so this is really helpful for those individuals just looking to go from, having 16 accounts that are doing different things to just a single portal that shows you what your financial well-being is.
Yeah, nice. I know for us, we've had an app, 4 years probably, and it's horrible. We're just updating it, actually rolling it out as we speak. It's going to be on top of if you will, a community. And I can tell you, I know for us, it's helped us because now we can communicate, we can engage with clients a lot more so. Plus, it's easier for the client to get a hold of us because they're on their phone. They want to see an app, quickly get in touch with us. So let's talk about from the business perspective. So how much of your business is now coming from the app as an example, or maybe revenue? Don't give us exact numbers.
Yeah.
But,
so
you know what I mean?
The business itself is funded by myself and a close group of friends. We put in, I want to say, so I raised about 160. I put in about 300 myself. And I am a non-technical person running a tech company. And so you can imagine the pain and the experience that's come with that. But it's been very helpful because I find that you learn the best lessons through your mistakes. And so as that's gone forward, what we've done is we've created a more secure app. We're compliant with a lot of regulations that allow us to serve a bigger audience. But about 15% of my revenue comes from the app itself. About 35% of my revenue comes from my marketing agency. And then the other 50% comes from the assets that I manage. I work with a lot of business owners, a lot of people who are retiring and need help with structuring an income from their investments.
Yeah, I understand. So this is a weird question. What percent, I know this is a hard question, what percentage of your income is now, how much has your business increased because of the app? Don't give me the exact amount, but you know what I mean?
Yeah.
Meaning,
So
for our
over the
business
past
people, I'm just wondering.
few years, it's gone up about 20%, 20 to 25%. And I recognize that when I have conversations with other advisors, they say, well, why wouldn't you just go run more seminars? Why wouldn't you do podcasts? Why don't you get on Fox, whatever? And my response has been that there's not as much leverage with those channels because they're more saturated. Whereas when you have a technology product, I'm not limited to the United States. We have versions of this product that are being developed for England, for Canada, for Australia. Now I can serve the big five. So we're literally building a global business, from that side. And so while the growth is modest, especially if you did it on real terms with inflation, what it's done is it's given me that platform or that investment where, God willing, in 30 years, I'll still have it and it'll still be able to serve a lot of people with helping them with a major decision.
Yeah, plus it's helped you for marketing because I don't think that many people have apps in that business, in your business. So I think it makes you look different. You're unique, and I would
Completely.
think it helps with the younger people, getting some of the younger marketplace. Plus, if you're I don't know your pricing strategy, but let's say I'm totally making it up. Let's say it's whatever 99 cents a month, whatever. It's
Yeah.
ongoing revenue. You know what I mean?
Right.
And
Exactly.
plus you're now available in the app store or whatever the case is, and people are going to find you where maybe they wouldn't if you were just doing a seminar for 12 people.
Well, and this from the tax planning standpoint is that the long-term capital gains are more advantageous than the short-term or earned income rates that you have. And so, when you think about it from a business perspective, being able to raise capital or to sell stock and to benefit from those RSUs or from the ability to leverage those long-term capital gains, that's really important in this environment. And so
Mm-hmm.
that has been one of my approaches is that I want to make sure that my family is taken care of from a financial perspective and that I'm not growing this business to take care of the government so that we
Mm-hmm.
can do all these things that I may not agree with.
Yeah.
So, look at it just from your earning and taxability standpoint as well. Is it, you're in Washington, right?
Yeah. Washington State.
Yeah.
Yep.
So, when you look at the all-in rate, from a marginal perspective, you might be closer to that 47%. Even from
Mm-hmm.
an effective rate, you're probably still at 35, somewhere around that. So, I look at it from the standpoint of I don't want to work until May or June every year for the government, right? I want to start working for myself. It would be great if it was sometime in March. That's the objective where
Certainly
we are
better.
right
Yeah.
now.
Totally. I like it. Yeah, I like that. So, by the way, we're talking the Vast Voice, telling business secrets to entrepreneurs. My name is Kenneth French. We're hanging out with Nathan Garcia. All right. Okay, let's talk about the financial advisory world and what you're doing there, because it sounds like it's pretty unique. Give us a little bit of a tidbit as to what you're doing in that world.
Yeah, so a lot of our focus is on shifting the income from that earned income bracket into that long-term capital gains bracket. And for business owners in particular, it comes down to the structure of their company, how they are structuring their income. Is it earned income or is it investment income? Do they have things set up in a manner where they can set up multiple LLCs to benefit from some of those services that they may be providing, but could also be provided in a second business or a third business. Like if you own a building, for instance, but that building is owned by your separate LLC and you're renting from that LLC, there's a lot of benefits to that, right? So, we come in and we look at their operating agreement, we look at their ownership structure, and then we start to build different incentive structures within their team. I'm a big proponent in that your company is not an asset until you can leave from it, right? And so, I love this book. You may have read it by Vern Harnish, Scaling Up. Right? Like I look at the companies in the way that I want to have the systems in place that if I leave, if I want to run my business off of my phone because I'm in Orlando or Miami or Austin, like it's not going to impact how much money I make. Right. And so the way that you do that is by structuring your business intentionally and then taking advantage of these tax opportunities that you have. Right. So having different structures in place, making sure that the ownership is correct. You're protected from a legal standpoint, from a liability perspective. If you pass, we want to make sure that those assets are fully liquidated and passed on to your family.
Yeah, you're talking our language again. And before we talk, technology, now we're talking estate planning, asset protection, kind of ongoing income or passive income really is what it would be. I totally believe in everything you said. I mean, I think in some cases people don't look at their structure like they should. And we as tax people, we really do pay attention to your structure. And the same thing on the asset protection side. If you want to have a good moat around your business, around your assets, you got to make sure your structure's correct. That sounds that's good news that you do that, because I think a lot of financial people, investment people, do not do that, and they put their clients in risk. How many times have you heard about some working for 30 years on their business or their real estate holdings, and then to lose it because of a lawsuit, or they haven't structured it correctly, or they're working at Walmart. No offense against Walmart workers, but because they have to be involved in the business, and then when they sell it, they still need some income because they didn't structure it correctly as far as their business for providing income down the road.
Absolutely. Yeah. I want to position the entrepreneur so that they can work because they want to and not because they have to. And I want to give them clarity of what that off ramp looks like, right? Because, ideally you continue to work as long as you want, but you need to have things in place to make sure that that's the reality, that you can make that a reality.
Yeah, I dig it. I dig everything you said. All right. Once again, because we're getting ready, what's one thing we've not talked about that you think can add value either to an entrepreneur or, I don't know, a retiree or someone who wants to retire? Just one little tidbit that we're going to use as a soundbite to add some value to them.
I would say, start to get around some of the younger generation. And I've just been impressed with the people in their 20s and kind of their outlook on things, because there's such a big cohort, but they have different beliefs. And, we've adopted our success through our vantage of life, but we also have to be amiable to those other perspectives and just understand, the business models that they're more open to, right? It's like your parents might have thought an Airbnb was crazy because of, what that whole concept was. And then the reality is that's opened up $1 trillion market. But that came out of necessity from a younger generation. And I think that, we're going to see something similar in the next decade where business models are going to evolve, but it's going to be that generation of folks who have the need and the vision and they can benefit from us as well, right? So it's a symbiotic relationship. I look at us as bridges between multiple generations, and I would just encourage people to, pass some of that wisdom down and to get in return some of the vision and the vantage point from that younger generation.
You're totally right. I was talking to a financial advisor just this weekend, and he's like, most of our clients are older. I don't really care about the younger generation really, because that's where all the money is. He might be right, by the way. But I said to him, well, what about the legacy of your business? Plus, by the way, it could be worth more money because you're going to have trail income coming down the road. And he's like, well, it doesn't. I'm not that worried about that. I said, well, the value of your business would be higher if you're paying attention to the younger generation, because if they're going to be sticking with your business, that'll help you. And the way to attract them is with technology, not old school paper. He actually even still had some old school application, paper applications. So I totally hear what you're saying.
Yeah, absolutely.
All right, just one more time. How does someone get a hold of you if they're interested in the app or your services?
Yeah, so the easiest way is just, if you want to find the app, go to pocketplan.io or just search Pocket Plan and we pop up. If you want to find me, the easiest way is on LinkedIn. My tag is Safe Harbor Planner, but my name is Nathan Garcia. You can find me on LinkedIn. On X, I am Fiduciary First. So that's the easiest way. Fiduciary First.
Got it.
Fiduciary for, with the number 1 ST. Yep.
Got it. Man, this has been good. I think this has been helpful. I think some business owners out there, some investors out there are going to be advantaged, and they should really check you out. I like what you have to say. Technology, all the stuff we've talked about, I think makes a lot of sense. So to you, thank you very much for spending the time. Also to everyone out there who's watching, listening, really, really do appreciate you taking the time to listen and watch the Vast Voice telling business secrets to entrepreneurs. Once again, this is Ken French. I really appreciate you guys.